Hey everyone, welcome back to Corporate Decoder, the place where we decode the language of business. Today, we're diving into a report from Elanco Animal Health, and trust me, it's more interesting than it sounds unless you are a dog or a cat. This isn't just about pet food, it's about a whole industry. They've just released their year-end results, and we're going to break down what it all means. First off, this report is dated February 25, 2025. This is called a Form 8K, which companies file to announce big news to investors. It's like their way of keeping everyone in the loop about important events. This report is all about Elanco's financial results. It's like their report card for how they performed over the past year and also offers a look at what they expect to happen in the upcoming months. To dig into the numbers, Elanco released a press release on the same day with details on the company's performance for the full year, ending December 31, 2024. The release also provided their predictions, sometimes called guidance, for the coming year and specifically for the first 3 months of 2025. Before we deep dive into the financials, let's clarify something. You can find Elanco shares on the New York Stock Exchange under the ticker symbol ELAN. If you're thinking about investing, this is the code you'd use to find their stock. Now, who's signing off on all this information? That would be Todd S. Young, the Executive Vice President and Chief Financial Officer of Elanco. He's basically in charge of all the money stuff. Let's get into the details. One key part is labeled Item 2.02. This is where they talk about the results of how they did and their financial health. It includes a copy of the press release where they announced their results for the past year, ending December 31, 2024. They also give a sneak peek at what they think will happen this coming year and the first quarter of 2025. Now, while this information is shared publicly, it's important to note it is furnished rather than filed. This is a legal distinction, meaning it's provided for informational purposes but not necessarily held to the same strict liability standards as officially filed documents. Think of it as extra information they're sharing. The document also specifies that it's not intended to satisfy requirements related to certain communications about takeovers or tender offers, meaning it is not related to an attempt to buy the company or any type of major investment changes. They're just reporting their health. The report also mentions exhibits. These are extra documents that provide more detail. For example, Exhibit 99.1 is the full press release with all the financial information, and Exhibit 104.1 includes some interactive data so that people can play with the numbers on their computers. Now let's talk about numbers. Looking at their performance, Elanco reported a net income, or profit, of $8.3 million for the fourth quarter of 2024. That's from October to December. This is down compared to the same time the previous year. Their revenue, how much money they brought in, was $1.1 billion, which is similar to the year before. For the whole of 2024, Elanco faced a net loss of $407.2 million. This is quite a turnaround from the year before. The company brought in $4.46 billion in revenue, which is up 5% from 2023. Looking ahead, Elanco anticipates revenue between $4.43 billion and $4.51 billion for the full year of 2025. They're also expecting a profit of $1.18 to $1.26 per share. For the first quarter, they are projecting revenue between $1.06 billion and $1.08 billion, with earnings per share around 28 to 31 cents. It looks like things are gonna stay about the same, but they expect to be profitable. So what's the story here? Elanco is a major player in the animal health industry, and they are working in a competitive market with companies like Zoetis and Merck Animal Health. The industry itself is shaped by things like how many people own pets, how much they spend on them, and how many farm animals are being raised. Elanco faces several challenges like making sure they bring new and innovative products to market and making sure they don't become overly reliant on just a few key products. Keeping up with regulations around the world and making sure their supply chain can handle unexpected problems are other areas of focus for the company. One of their major problems is their debt. Elanco has a lot of debt from buying Bayer's animal health business a few years ago, and they're trying to pay it down quickly. This affects how much money they have available for other investments, like research and development or buying other companies. What does this all mean? Elanco is navigating a complex environment, balancing growth with financial responsibility. I think Elanco is doing a pretty good job overall. They're growing their revenue and they're managing their debt pretty well given the circumstances. They are in a good position to keep making money and paying down their debts. The animal health market should keep growing as the global population rises and as more people own pets. The biggest risks they have are failing to innovate and global regulatory problems that hurt their products. They need to continue to diversify their product line and expand into new markets to stay ahead of the competition. Overall, Elanco appears to be on a steady course. They're not without their challenges, but they seem to be managing them effectively. The future looks reasonably bright for this animal health company. Thanks for watching this episode of Corporate Decoder. If you found this breakdown helpful, please like, comment, and subscribe for more insightful analyses. Let us know in the comments what company you'd like us to decode next.